Tandon of JRG has also joined in now. Morning, Anand. What do you think? The correction's done, or you are apprehensive that we don't have a firm bottom in place for the year yet?
Depends on which one you're talking about, Udayan. The up one or the down one. I think the upside correction is almost done. I would imagine that you'll look at another 3 or 4% at the best, because after that we'll be basically waiting to see how the budget disappoints. And given the kind of limited maneuverability that the finance minister has, as I said, I think it's more likely than not to disappoint. The economic numbers are still looking somewhat bleak. I think you'll find that the IIP starts to slow. Whatever we can see anecdotally, most companies are reporting that order books are thinning out, and interest rates around the world have now started to go up. So I don't see that the RBI has too much maneuverability on that front either. So the upside from here looks like, given the sharp rally, 2 or 3%, perhaps 5% at the max. After that, I think you'll have to wait and see how the policy action pans out.
What about the downside correction then? Do you think that's done, or is there more to come?
I think there is. It will likely test again wherever it started from. It may actually go lower depending on how badly the global situation deteriorates. I think there is, to some extent, there are two ways of looking at it. One is that it's a mean reversion of sorts, because we've had the U.S. market rally tremendously versus a market like India, which has actually corrected. So to that extent, it has to have, the U.S. market today is looking grossly overbought, as is the commodity space. So if you have to look back into areas which have underperformed, India is one such market, as are many other emerging markets. The other thing is, of course, if you're looking for straws in the wind, Egypt has kind of looks like it is sorted out a bit. The parliament may actually convene, and you may actually have a budget session in the first place. So those are somewhat positives. On the other hand, as I said, this is a year which is going to be extremely tough because of shrinking margins, lower order books, and higher interest rates. So the downside is far from closed. The US itself, I think a lot is being read in terms of the recovery there. If you have to look at the nature of the recovery, there are two startling facts. One is that most of the recovery in the economy has been funded by the government. So we've actually got a situation now of the US behaving like the Indian market was in the 1970s, which is that for the most part the government expenditure is what drives the economy. And the second issue is that unemployment continues to remain at a very dramatic high. So whether you can have consumption growth following up on that is still somewhat suspect. I don't think we are out of the woods yet.
And you were talking about where you see the index headed, but where does all this up and down leave the broader market space? What about that whole universe?
Well, obviously, Mithali, with the smaller companies, it's going to be tough going, because obviously they perform best in a benign environment where there is good order flow and good interest rate scenario, both of which are somewhat negative right now. As I mentioned, if the order flow actually begins to slow down, especially in infrastructure, which is something that we are beginning to get a hint of, I think you will see that the problem trickles down to the smaller companies as well. Also, the other way of looking at it is, if you look at, for example, staples or any of the other commodities as well, with pricing pressure coming there, the ability to pass on prices for smaller companies is even lower than for the larger companies. So though we see a commodity correction in the next couple of weeks, especially in the metal space, I'm not sure that you'll find that the smaller companies will be the first to rally. Of course, they have fallen the most, so therefore you could find part of the retracement in the technical sense, but on a sustained basis, that would be a space that is likely to underperform.
Anand, we were talking about the budget. I mean, there's been some talk about a pre-budget move over the last couple of days and what the budget may or may not do. You think post-budget rally in the market is a difficult one to map?
Well, if it were to happen, it won't be because of the budget. Obviously, it's quite difficult to figure out why a rally happens or why a fall happens. But the fact of the matter is that if you look at the maneuverability that the finance minister has, as I said, it's severely limited. We've had 2 great years in terms of economic activity when the rest of the world was doing bad, in where we actually ended up expanding the balance sheet of the government very significantly at a time when you had supernormal profits from sale of spectrum. That could have been taken as a time when you could have consolidated the government position and positioned yourself well for the expenditure control which needs to be done at a stage where interest rates are tightening. Clearly that hasn't happened. So, we have a fiscal deficit which is still quite high. And if you remove the capital gains that you had this year which won't recur, then a rising oil scenario, a rising interest rate and a burgeoning fiscal deficit doesn't augur too well in terms of the government's ability to do stuff, which essentially means that you will have further increase in prices as various subsidies come under pressure, and or you'll have to raise taxes in some form which will further impact economic activity. The last option, of course, is to continue to run a high fiscal deficit, which given the inflationary environment we are in becomes a bit of a problem as well. So overall, it's not a position where I would envy the finance minister's job at this stage.
Conversely, Anand, if there are negatives from the market's point of view in the budget, would you say the event itself has the potential to drag this market much lower, to break 5,000?
Well, I think, unless, I would imagine that the government is not going to do too much in the budget because they have not done too much in the past either. So, I think like most budgets, we'll have a lot of discussion and brouhaha about it, but it's an event which will just pass and the markets will go back to whatever trend they have to. I think the broad trends is what I'm trying to outline, and, the argument is that, the current government has not shown any proclivity towards trying to reduce expenditure. Under the guise that we need to continue to create an environment where there is economic stimulus. That's something that I've been arguing against, because you can't on the one hand be patting yourself on the back of maintaining a significantly higher than trend line growth in a market when the global markets are collapsing, at the same time say that the economic recovery is weak and we need to provide the stimulus. So that's always been a difficult one for me to square, and consequently I think what we are seeing now is the effect of some of those policies catching up finally.